Hello, what's up, guys? I hope you are going well. Today, our lesson is VSA Introduction Volume Spread Analysis. What I say, volume spread analysis. Okay, got it. It's very important lesson. You must learn the VSA because our trade is basis on volume, because volume is a king. Volume confirm you that you will take the trade or not. Volume gives you confirmation. The big players and institutions manipulate the market easily, but they cannot manipulate the volume easily. So that's why when we execute the trade, we must confirm from the volume below. Okay, so what is the definition of volume spread analysis? Volume spread analysis is a method of analysis that looks at candle and volume per candle to determine price direction. It looks at the quantity of volume per candle, range, spread and closing price. So here is the picture. This is the picture of volume spread. This volume. If there is any business in the world, so it must have customer. If you are providing a service, you must have a customer. Even if you have a small shop, you must have a customer. You must have a demand. Don't let it happen that you have fulfilled the shop but you don't have any demands or customers. For example, if you go to a fruit or vegetable market and it rains start, the demand for buy and sell will decrease in the market because people will not go to the market due to rain. Now the main reason is that there is no volume. What I say, the main reason is that there is no volume. Volume is very compulsory in the market. Volume is very important. If there is no volume in the market, don't place the trade. Always wait that market, always wait that volume will come in the market. Then find the setup. Okay, got it? So there will be no customer that day due to rain. So the good news is that you will get business on a normal day, but you won't get any business on a rainy day because there is no volume in the market. There is no customer. There is no demand. So volume is very important in the market. If you notice that there is any event like a Christmas day, Ramzan days, or any festival, there will be a lot of demand and volume in the market on that day. But I say there will be a lot of demand and volume in the market on that event. Suppose if you see that, you will see that one with the largest superstore in your area will have a very high sale. Every market in the world is driven by the volume. Some people ignore it completely. Some people say that volume is an old strategy that has no benefit. If there is no volume and you cannot understand the volume properly, then you will not be able to a good to get a good profit. So first of all, you have to open your volume indicator. You will go to the indicator section where you will write the volume, and there will be many volumes indicator. You just have to click on this volume. Suppose I came to this chart, I open this chart. This is the indicator, this one. Okay, I click it. You just write here volume, but I already list the volume in a favorite. I also put the volume in a favorite list. So this is the volume. Just click it. Okay. So this is the volume. This is the downside. This all volume. Okay. This is the volume. This is the candle's volume. This candle volume show the strength of the movement. What I say, volume show the strength of the price movement. Okay, that is the work of a volume. If there is a high volume come in the market like this one, you see there is a volume come in the market, high volume, this one. What it indicate? It indicate that market will give some activity. Okay, volume will give some activity. Okay, if there is a high volume, then there is also liquidity. What I say, if there is a high volume, then there must be liquidity. Okay, now here is, in this zone there is a volume in this zone. Okay, this candle show a high volume. So in below this candle, this climatic action bar volume, below this climatic action bar, there must be a liquidity. Okay, got it? Maybe market came down here and sweep the liquidity and then will go to the upside. It may be possible. Okay, got it? Any financial institution that says my strategy is 100 legal and accurate, that is 1001% liar. Because there is only possibilities and probability. Some setups have very high probability and some setups have very low probability. I will tell you about the low probability setup, how you did the trade with the low probability setup. That also give you 100% accuracy. One thing to always remember is that you always have to manage your risk. It means does not put all your money in one trade. This is because one setup is 100 accurate. There are chances of any setup failing. If you are new in trading, you should trade with a small risk. You only have to take 1% trade. You just cannot go above that. If you take 5% risk, and you lose, it will take a lot of time to cover that 5%. Besides this, your psychology will also be bad and your trading will be affected. You can still go up to the 2%, not to go above 2%. If there is a loss of 2%, it will be easily covered. It will take a lot of time, but if you take a 5% trade of your account and you lose, it will not be easily covered. It will take a lot of time, which will also damage your psychology. If you have a $100 account, even if you lost $20 of it, it will be easily recovered. And if you take a 5% trade on a $1,000 account and lost $50 or $100 of it, it will take a long time to cover it. This will also damage your psychology and your account will be closed very soon.